I'm going to give a review here of everything that happened during the week, or rather the last 2 weeks, since it was really nice how everything played out from high season to low season. So let's go over it from here. So you already know that at this point I had sent in the weekly outlook that I expected an upward movement from here. The system is fractal, so I saw the liquidation of this. It was unmitigated. It's irresponsible. No magic here, no guessing. Just the same system applied daily. And that's it. So how did this play out? Ready? The price got here to touch 50% of being responsible. And what we got in a minute was the structure change. We have a logo here. Well, this was a rejection at first, but then we did close with body. We closed with body below the other valid pullback that was here and below this. So when the market opened the next week, just the opening made the structure change above this. So we had this origin zone. We had this origin zone. And the price around here in Asia, London, started doing this again. Well, it started doing this again. There was a small area around here that had worked to send us further down. So here it made me do this double roof from that area. Liquidate all this to mitigate the flip. The shift left unmitigated for a minute. 50% and then it went away. So that day was a rapid drop at the opening. It hit that, and from there it moved practically 300 points. So, well, we have that. And the next day, more distribution to the upside. Pretty linear too. There wasn't much to go into detail here. It opened and went straight up to break a higher time frame. High. So let's see. Low close. With body. This is our valid. High close. With body. Simple. So we already have our higher time frame change too. And we have this area. The price continues around here. Well, now the next day. And around here. What did we get? Order flow again. What does the price do with this area? It leaves it, comes back, and the value, pushing us further down. We already know that there's a positioning there. If I know there's a positioning here in this whole supply zone, and this whole movement happened, I know there's liquidity there. I know there are orders. You know that. I want you to understand the price through positioning by knowing from where those orders are moving. So the price comes and takes this out and doesn't take the area from which this was formed, as we've seen in the order flow classes. All the small details around here is in danger and ends up taking it. So it takes all that too. We can see here the shift from a lower time frame to come and mitigate. Now the area of higher time frame, so multi-time frame here, through the lower time frame, we keep making impulses to reach the high time frame, to make a double top of higher time frame. And through a structure change in the lower time frame, we go back to where the structure had changed in the higher bullish time frame. So from a lower bearish time frame order flow, we come to build the bullish higher time frame narrative that is forming. So now the tab is at 50% of the bullish change here in higher time frame. And that finally takes us out with the help of the earnings. This was also earnings that week, so it ended up taking out that area, and that's it. Well, I think there was something about S&T, although I think I won't go into much detail with that to keep it short.
Well, let me check. It was Wednesday, the 15th. It's here.
Well, the SMT went further down. In fact, the Nasdaq had fallen quite aggressively, while the S had already, when it had already broken, still these order flow highs that the Nasdaq had not broken yet. The ESI held on to the areas even more, but basically we got the same. An area here with higher temporality, the top, and the continuation upward. Done. So over here was the imbalance from the earnings. I'm not sure if it was clearer at another time. Let's see. This is the lowest temporality where a single imbalance is found. You already know that I go up or down as much as possible to find a single imbalance, and I only use them in higher temporalities. Here in this case, since it was a news imbalance and there wasn't a single fractal here, it's the first thing one would look at. But small imbalances like this, from normal price action, I don't keep an eye on them. The price reached that area and left us a new higher time zone here. When it leaves with a body, it leaves us this whole zone. This whole zone, then we had this, then new high, new low. At the moment we closed above and so on. And the price reached this area of one of the past reviews I sent you, which couldn't reach here one day. And the market closed, but the next day in Asia, it touched the 30, bounced back to the previous fractal. 50% from there, kept rising, and already at the opening the next day, it did start to show a downward intention from there. That was the origin of that higher time frame area. And here, the area of that shifted, low, high, goes back above, comes back to 50, clears everything from the lower time frame and reaches that origin over here. From there, the drop then started. Fall for what? To come to the origin then of greater temporality. The origin of that high time frame zone. This origin is here. Falls to 30% over here. The market closed later at its 50%. The 50% couldn't reach the previous high and started to make sweeps from the first stage because it failed to give a boss a continuation. So when it fails or is rejected from a high, that endangers the low of that displacement law. The sweeps end there, and this one, if I'm not mistaken, now one over here, was FMC. So for now, we have the first tap, and that double bottom is built here. The double bottom is finally built. Look at this internal zone I have here. It's the clearest, the one with the most consolidation, the one with the highest volume of orders that we have in all this movement. So it's an internal area that I started to take this day when I saw that the price was selling off so strongly. So over here the opening happened. It simply went up to a temporary low flip area around here and started falling. I waited here to see if it was just to fill the opening gap of the day, but no, it kept falling. Once I saw it kept falling from the gap, right away, what I did first was locate this zone we saw there, which in a higher time frame is the most noticeable within the origin zone. It's like the main confluence. I took it, and as the movement is really very strong here, I didn't take anything. This was really a melting of 200 points. I wasn't going to take an aggressive order from there, and even more so, being an internal zone, simply not being the flip as such, which is around here, a sweep, because here there is also a sweep. But they understand the idea that it's not like the complete origin flip, so it wasn't going to be so aggressive here, but that it did happen, and that it instantly changed my mindset up to the top, and thinking that this bullish impulse was going to start developing. Despite this being a lower time frame, low, both 1 minute, 5, 15, everything showed rejection to hit that 50, which was a very good indicator to take out a higher or lower time frame low. And still in the lower time frame, there was rejection, because there is something important there. And since we got it here, valid pullback, the close above the last candle of this bearish that set the low. So when it closes down here, this high is valid in this downtrend to consider the change of structure. Then here it changes structure, and see that this in turn, I remove this area now. This responsible one, well, this area here, in turn was responsible for removing this from here. Removed all this origin and removed all this. See that it's the last area before breaking everything. So what does this become? The one responsible for removing a responsible. As I was telling someone who had this question, it's just that I see responsibles everywhere, and sometimes the responsibles in charge of removing responsibles fail. Well, yes, but it's not about taking just any responsible. It's about understanding that there are responsibles who've done something more important than others. Responsibles where there was indeed a positioning, or that implies something important in this case. This responsible who did look at everything he took out. I mean the number of positions here. The fact that this has been taken out gives it a lot of hierarchy. So at the moment when there is both the structure change as well as this responsible to break this responsible, this is indeed much more of a guarantee that it will work. It's not like taking just any fractal responsible to break a simple area and that's it, which can work. Yes, but the idea is to take the one that presents itself better. Well, the price came here, so take a short here. The price came to this origin fractal. From around here, in this area, in 5 seconds, I touch it, and in seconds, the price was doing this, so the tap happened, it took out the low here, and then what I did was grab 50% of this, so as soon as the price took out this low, it went back to 50, and on a 10-point scale, I took 1 out of 10 points over here, anticipating the pullback to the area we had given without mitigating, and from there everything started to build up. Then the price arrived, generated this new area with its responsible again, coming here, giving the flip. In fact, it gave it around here. This low, high, low, remove that high. You already know I want an external low to the fractal that's being generated. So if this low came after this, I consider it the flip. So what happens here? It covers the 30%. It goes. So zone, favoring order flow, favoring narrative. I have all higher time frames in my favor. Why not take it? So there's the flip 30%, and it ends up going. And in fact, over here, I took another buy. When I saw that in seconds, this was respecting fractal after fractal, and this was unmitigated. This is what it is. It's responsible for removing a responsible one. This is responsible for removing this around here. So this stayed. This is a mitigator. And over here, the price is an octopus to a fractal, and it's a quick 1-to-1 of 5 points to the 30% of this. It touched it once and gave it the octopus every hour. To this area here, to this responsible one, to this area of consolidation, to this last fractal before leaving from here. And this would also generate a flip, let's say of a higher time frame. This is the pullback to the flip area, and here is the low, and it goes. And now, already, through the book, validated region, flip identified, origin point, first tap sweep. Touches the 50, it gives a reaction. Now it goes down to touch 70, and it ends up going again, leaving us here with a new flip. The price reaches the origin. It can't overcome it. It starts to be around here that the trap, close to the origin, this one ends up taking it away to come and mitigate. Around here, the responsible fractal in seconds. This is the fractal responsible for taking out the high in second time frame. And we continue then. Okay. Now we have there, as I was saying, the double bottom tab constructed. From all the longer term changes, then the price during all that it did in the shorter term finally built up the longer term pattern. If the complete pattern is already ready, we expect strong distribution. Then it was supported by the earnings, the news, the FOMC. NFP supported, everything aligned perfectly. And well, for Friday, as I told you in the audio, the answer to what Waldo asked, I already had the bullish idea because of all the fundamentals. I didn't know how it was going to turn out in FP. I told you that what I would expect was for it to come out hopefully negative to start buying from optimal points, but it came out negative for day X. And what Movimental tells us is to move up, and seeing that it started to come back up, I already knew that we are actually very bullish. Look at how the price didn't give that reversal. Why? Because the market's intention and direction have been building all this time. When the news goes against the market's intention, what you get is that reversal. This is something that I have told you many times when I talk to you about context, through fundamentals. And well, here was the clear example. And on Friday, well, what I did, I told you, I bought at 30% of the first fractal of 1 minute that was generated. So this was that fractal. There was a pullback to 30%. It was my first scalp, and I didn't do anything else until waiting for the opening to see what it would bring us. And there was another news after the opening as well. At this point, what was I looking at? I was looking at on the daily. We had an imbalance here. This was the closest, really, and I believe it was of lower temporality. There was a responsible. Yes, this one here that sent us straight down. Well, that's what I was looking at first. The daily imbalance. And from there, that would be my next target. So it reached the daily imbalance. And here, I also applied some of that tip. In the S, it had already been somewhat mitigated by that responsible person I mentioned. The equivalent, and well, the S I saw was holding quite low at the opening, while the Nasdaq over here rejected. This was a good short. The Nasdaq made a high and rejected while the S was holding. So that's a good confluence to make an aggressive short. And over here the Nasdaq just kept holding from this area. And see how the price came to it and made a continuation with these hikes on the lower time frame. So what does it do here? It swipes everything internal. And once again, from this point, it continues. So around here, when I saw the rejection with the news, I finally started thinking about going short, at least until where? Until this area. I first wanted the break of this responsible to be sure, and of this area. So look how the price started to make fractals, fractals, fractals. It was quite beautiful. It did it very, very linearly in the lower time frame, made the swings, and seeing that the price didn't hold due to that responsible we saw in 1 minute but kept falling right here, in fact, I started scalping a lot. I had a stop with a false flip that I got caught with. I think it was around here. Some purchase I made from that area plus this responsible. I already know what it was. Alright, what I told you. Now I want the flips with lows. External to the previous fractal, of course. What did I do? In 5 seconds, I grabbed this, which is internal. So, seeing that it created this hype, I wanted to buy around here. I saw that this responsible was messing around. I saw it didn't break it by a limit, so I based it on that. And around here, I took a buy and got stopped out. So, seeing that it really started chasing like those magnets that were lower and started taking out all those validated bullish areas, I said, alright, this is at least going to hit this 50, and I started to go short. Up to there, I started to go short until he got there. And well, I took my last trade of the whole stretch, which indeed was the long I was waiting for. And behind it, the same. A validated area of a continuation sweep to the first tap, and it went. And for those who wanted to keep waiting, well, it gave them the price. Low, high, low, takes out the high, pulls back to the area, and it goes. And up to what area did a fractal validated in the opening get? Internal sweep of the first tap by a tick. And that is going to make everything to now create the double bottom. So now the tap, double bottom again. The distribution is ready. Now up here, because I took this area, you all know that when I have a string of news, I leave out the string and handle it separately. I had this area, And the data week, I think I took it in 5 minutes here. It reached 30. Wait for this to pick up. Here it reached 30. The first step was what led us to do this. Then around here, it started to reach 50 and showed more upward intention. It retreated to the previous area, couldn't make a new high, came to take all this, mitigated the flip in 5 seconds that it made over here, and here it made another internal flip. Retraced to the area, finally reached 70. It was already Friday. A position started to close around here. I saw an imbalance around here. Race hit the tiger at 50% and started to go again until now reaching 50% of the data week. It got there, and from there, the day ended. Positions were closed, and well, now here, the market opened, taking out that high and touching 50% of the daily imbalance that we had seen here. Look how this high was about to be touched, but it couldn't, and immediately that rejection at some points. So look how beautiful the fractality of this system is. Over here it gave several setups in the same way. Look, over here at the back was the touch to this. Wednesday. Well, over here then. See what we got here on Wednesday with the opening. A drop. And the price starting to do the same thing. As I was explaining to someone here just now who asked about all this, then see how easy these setups are. This one wasn't really the clearest, because in fact, there was an ugly wick from a report here. But take all this. There's a tap here at 30. It reacts. Then 50, 70. It reacts again to return to the origin. Can't make a new high. And keeps taking everything. Later there was news here. So, we had to. This area now. First tap at 30%. Plus the accountable one. Then it stayed unmitigated. The 50 reached the 50 price and directly gave 40 points of reaction. And what was down here? The origin. All these inducement lows close to the unmitigated area. By unmitigated I mean that it has untouched levels, and especially when it's at 50 and it brings the same thing, it arrives, starts to reject, to reject, to reject. So an excellent indicator that the demand zone has orders there, and it goes. So look at this setup. It's really good. When the day is very trending, making structures, validating several, since we haven't had so many ranging days, swiping between origins and all that. But look, the theory is the same. And then over here it's really creating structure in a higher time frame, right? Here it fails to put a new low and ends up taking this high, leaving us with that shift area because we took this low from a higher time frame. And as I've told you, if I go by reality reaching a target of greater temporality, Once the target of greater temporality is reached, it assumes a cycle change. Since when do I assume the cycle change? When it starts to break responsible, the responsible verifies in this case. So look how it breaks it, followed by breaking the origin. Here comes the origin. Kind of. Can't manage to put a high, comes to test. Again, tries to distribute, doesn't manage to, and ends up taking it. Now the change of structure, and now around here, the price, after this rise, went back to mitigate what hadn't been mitigated, that change of structure, and that temporality. That was a bit of everything that happened during these days, so briefly without going much into detail in the temporality of seconds. I hope it can be useful to you. Always analyze quite a lot with the same things I have taught you. Look that we don't change anything at all. Everything remains the same, and the market is still explained in the same way. It's just about adapting to the number of points that are moving here. Those are the logical variations that the market is having, but the theory remains exactly the same. Have an excellent week. Bye bye.